Hello everyone, my name is Andy. Today is Sunday, June 11th. Time is around 12:50 GMT, and we will have a look at the NASDAQ futures on the Oanda platform. So it's Sunday, markets are closed, but in the weekend I always analyze the higher time frame, the weekly, the daily, for investors and as a preparation for the trading week. And then on weekdays I have a look at the lower time frame, the 4 hour, the 1 hour, the 15 minutes, to see which trades we can take intraday or as a swing trade. But so now the higher time frame. Here we can see the weekly time frame, so the weekly chart. And my take on the Nasdaq is that we did a good wave one to the upside. This is our impulse here to the upside in five waves: 1, 2, 3, 4, 5. I would say it's not so really important where this wave one and wave two is located. For me, the most important thing here is I see this as a wave three, and this as a wave five, because we end here with divergence, and from here we had a deep retracement. So I believe this here was the end of an upward cycle. We end with divergence. So 3, 4, 5. This is our wave one of the higher degree, and then this is a retracement to the downside. I would consider this as a different cycle. This has nothing to do anymore with this cycle up. So this here is our wave two, or the wave two is still ongoing. We cannot exclude that the low of the wave two is in, as long as we do not take out this wave one high. What also bothers me a bit is that we did not fulfill the minimum requirement for a wave 2, which is the 0.5 FIP retracement. We didn't reach this level. But yeah, sometimes this happens if an index is very bullish. Sometimes we do not reach this 0.5 FIP retracements, but this bothers me a bit. I like to see the requirements fulfilled, and now this is not the case. But I prefer to draw it like this, that the wave 2 low was in, because overall the Nasdaq is a bullish index. We are making higher highs, higher lows on the higher time frame. So I cannot uh, pretend that I think that we will still make a wave 2 low somewhere here. For the moment, the data is not suggesting this, and so I only trade based on data. I interpret the data. So my primary scenario now looks like this: that the wave 2 low was in, but it could still be that, for instance, something like this. This is still something we need to consider. It could be that we are still doing our wave 2 if we do not take out this high here, and we break again this low for some reason. It could be that that our wave 2 will end somewhere here in this box, because this could be our wave A to the downside. Then here we have our wave B, and then we would have a wave C. So let's assume that this here was the high, I think last week. Then our target for the wave C, becomes this area here, which would coincide with the area of a wave 2. But like I said, the data is not suggesting this for the moment. I just want to share with you this this scenario as another possibility. Okay, but for now, so let's assume that our wave 2 low is in here. If we further zoom in to the daily, then okay, this here is our wave 2 low. Yeah, so our wave A, wave C, and so now, yeah, this looks very impulsive to the upside. This is an impulsive structure, and so here I believe we did our wave 1, wave 2, and yeah, we are doing an extension in wave 3. So a wave 3 is supposed to reach the 1.618 level of your um, of your wave 1 and your wave 2. And so as you can see, we already reached this level. This was somewhere here. We reached this level, and so we have an extended wave 3. Now, if we further zoom in on the 4-hour, but this we will do more in detail from Monday onwards. There on weekdays, I analyze the lower time frame, the 4-hour, the 1 hour, the 15 minutes, to see which trades we can take. So yeah, we are actually in a relevant area, an area where we can expect a reaction to the downside, because as you can see, we reach the equal leg area from this wave 1 and this wave 2. So this is a very interesting observation for traders. So we are in the equal leg area between the 1 and the 1.618 FIB extension. And yeah, we also start to see, I mean, it's quite clear, divergence here in the 4-hour. We are making new highs, but we are losing a lot of strength, as you can see on RSI. So this is a very interesting observation. For me, this starts to look like the beginning of a pullback. If we do not take out this divergence here, or this RSI high, this is the beginning of a pullback for me. But this is something we will analyze on Monday. What to do with this, how to trade this. Like I said, on weekdays, I analyze the 4-hour, the 1 hour, and the 15 minutes. But yeah, for now, I think we can stop here. I shared with you the analysis, the Elliott wave count on the higher time frame, the weekly, the daily, and yeah, what I will learn from this as an investor is that you do not buy here, like you are too late, let's say, or I don't like to buy here. I would wait for some kind of pullback, be it as a wave 2 pullback here in the higher degree, or at least here this pullback in the 4-hour might lead to a buying opportunity if our wave 3 high is in indeed somewhere here, then you wait for our wave 4, an an ABC, something like this, A B C, but yeah, so ABC to the downside, your wave 4, and then here this is again an area to buy. But yeah, it's a bit too early to consider this. We need to wait for a bit more data so we can define this areas where to buy. Okay, I hope you enjoyed this analysis, and see you back on Monday for another video on the NASDAQ, where I will discuss the 4 hour, the 1 hour, and the 15 minutes. Thank you for watching. Have a nice day. Bye bye.